Stocktake is brought to you by Intelligent Investor, Australia's leading value investing research house. Get your free trial by heading to intelligentinvestor.com.au. The information in this podcast is current on the day of recording. It is general advice only, does not take your personal situation into account, and may not be suitable for you.
Thank you for listening to Stocktake, Intelligent Investor's fortnightly podcast, Australia's investing home for value investing research. My name's John Addis, the founder and editor of Intelligent Investor, and this morning we're going to be talking about reporting season. We're going to cover three stocks that we feel have made significant results. That is CSL, Cochlear, and Audinate. A former favourite which has crashed substantially over the past 6 months. Graham, CSL came out with its results last week. We're wondering if Trump will impact the company. The results are in. What's going on?
Yeah, Trump has had such an effect on so many different companies, and you wouldn't naturally think that CSL is going to be on his hit list because it makes kind of life-saving medicines, and although the Americans probably overcharged for most of them, it's undoubtedly one of those companies that's doing a lot of good for all these niche diseases. But there was one part of the result which definitely was affected by him, which was the company, around 20% of it comes from selling flu vaccines. And that had been a pretty steady business until now. But then in this result, they had a 9% decline in revenue, which has been pretty much put down by management to declining flu vaccination rates. It wasn't any change in pricing or sales tactics or anything like that. It's that people are just increasingly hesitant about getting flu vaccines, which is interesting because they're manufactured differently to COVID ones for the most part. And
are you expecting people to be rational about this kind of stuff, Graham?
That's the thing. I mean, with the new health secretary, Robert F. Kennedy Jr. in place, who constantly puts out misinformation about vaccines, it's probably no surprise, but it's a little bit scary that something that's been accepted for 50 years that has endless amounts of evidence to show that it helps prevent flu infections and reduce the severity of them. It's been a target of this kind of misinformation campaign by Trump.
So is it really affecting the company? What about the other divisions? How are they performing to maybe offset the effect of, is it Securus? Is that how you pronounce it? Securus?
Yes, Securus, I think.
Securus.
I always say Sequoias. Right?
Yeah, I think it's one of those.
I want to say Sagittarius.
Yeah, every time I see it, I just say it in my head. So it's it's not a great one. A great name. Anyway, the other divisions are much easier to pronounce, Vifor and Behring. But those guys are doing okay. The Behring division is the one that really makes the money for CSL. And
what does Behring do?
Behring makes antibodies for the most part, but a few other things as well. But it's the one that was kind of the historical CSL before it made its larger acquisitions in the last decade, where it would extract antibodies and a bunch of different important proteins out of blood plasma. So in the States, you see in plenty of towns these plasma extraction clinics that are run by CSL. And so the CSL is basically harvesting all of these interesting proteins out of people's blood. And but anyway, so that's the bulk of the business. And it's been doing great. It's better than ever, actually. Its sales have been going through the roof. It was a 15% jump in antibody sales this year, which is well above the market rate as well, because its main products, Privigen and Hizentra, are doing particularly well. Patients are really liking those. So
must be the catchy names, Graham.
Gosh, whoever comes up with some of these names. Yeah. I actually did read something about that, and it was that they find it very difficult to come up with names that aren't already kind of patented or trademarked and all of these kind of things for legal reasons. So they end up coming up with these. Oh, that's the other thing, is they can't be, it seems like a stupid law, but they can't be descriptive of what the thing does in medicines because it's somehow promotional or something.
Right.
So, that
sounds like a hangover from another age.
Oh, yeah.
Kind of weird when in America they're allowed to advertise those medicines as well.
Yeah, that's what makes it even crazier is you
Yeah.
can't use it in the name, but you can throw it on people's televisions all
Yeah,
day.
weird.
So yeah, there's some mixed up laws over there. But anyway, so we think it's probably an opportunity for CSL that its iron division Vifor and its vaccine division are both kind of struggling at the moment, but the main powerhouse is doing great. So I think the other two will probably, I mean, vaccines, it'll have a rough 4 years, but there's a lot more to making money in vaccines than just the pure vaccination rates. So CSL is getting more efficient at it. It's got a bunch of, it's kind of taken a more specialized approach where its vaccines are used for specific groups more and more, which it can then charge a little more for those.
Can I ask a question, Graham?
Yeah.
Just on that vaccine front, I believe one of the attractions of CSL vaccine division was that it uses cell-based vaccines and not the eggshell type. Did I have that correct?
It uses a mix. So it's been increasingly moving over to that type. And then a little bit ironically is that it was pushing really hard into that over the past kind of 10 years. But since COVID, the whole industry has kind of shifted more towards the mRNA vaccines.
Yeah, that's where I was going. Yeah.
So, yeah, it's...
Surely that's a much more efficient way to manufacture vaccines rather than... Well, cultivating them in eggs seems like a mad idea, especially now that you can't buy eggs for love or money.
Yeah.
But, isn't the mRNA a threat to that traditional vaccine business?
It is. It is in the sense that it's a benefit as well because it allows for a much quicker turnaround in the development of them. So that's a benefit. CSL does have mRNA vaccines as well, so it's not kind of locked out of that market.
Okay.
Maybe in hindsight, an mRNA vaccine in Japan for COVID, haven't they?
Yeah, that was their first one, and they'll probably have a flu vaccine as well at some point. So, I mean, if they went back 10 years, maybe they wouldn't have invested so much in the in the cell-based culture because they always wanted to get away from eggs because there's all these disadvantages whether people are allergic to them and all kinds of things. So they were always going to move away from that, but maybe they would have skipped the cell culture factories if they knew mRNA vaccines were just around the corner. But, I mean, the company is the leader, so it's going to work with whatever is available, basically, and probably dominate that field as well. It's just a matter of its investment, level of investment.
And Graham, the stock price is well over $300 middle of last year. It's now down to about 260. What were the reasons for that? Is it concerns about Trump? Is it the poor performance of the Sagittarius division? What's the reason for that?
I think we should just call it Sagittarius because it is just way easier to pronounce. A lot of the change in share price has been, well, partly in anticipation probably of the vaccine division's poor result because analysts can see that ahead of time as they do their different tracking things on the ground. The slowdown in the iron division would have also been an issue. Probably just seeing the Trump administration get in would have added a lot of hesitancy. The price to earnings ratio has come down a bit, which suggests that people are just less optimistic about growth. And I think over the next few years it might be the case, though really having seen this result, I think I would be surprised if it's actually that bad because that antibodies division is just doing so well. I think it'll eclipse whatever issues are in the other two. They'll become smaller and smaller issues over time.
And this has been an amazing privatisation for investors who got in at the beginning, the Commonwealth Serum Laboratories, which I think was in the mid-90s, something like that.
Yeah.
It's done an incredible job of expanding its footprint all over the world and getting into areas that it hadn't been in before. Generally, the management team seems to have a good record of acquiring new businesses and developing them. On a PER of 24, this stock looks quite attractive now, right?
Definitely. Yeah. It's been a great case of where over the past 5 years, earnings have been growing consistently, but over that time, the stock price has gone hardly anywhere because people have just basically lowered their expectations from being too enthusiastic 5 years ago. And that's the opportunity today, is that if you look under the stock price, you've got this very sound, very critical company to the world that is continuing to grow and do very well. And I think 10 years from now will be substantially larger than it is now, just by looking at different kind of demographic factors and how that's going to impact its sales.
Yeah.
And on top of that, you've got a share price that's gone nowhere for 5 years. So now is the time.
I actually think that's one of the reasons why the stock is less popular now. I reckon there's just so much momentum, especially with all these passive flows, that when a stock price goes nowhere for 5 years, people think the business has stagnated or it's not doing anything.
Yeah, totally.
And that can generate its own kind of narrative and momentum. And that seems to me a reasonable explanation for what's happened to CSL.
Yeah, you have to think too much to justify buying it, basically.
Okay, let's move on from a happy story to one that what used to be happy and is now quite sad. Gaurav, Ordinate, it was trading, $27 last year? I think it fell down to about $6 or $7 more recently. What's going on at Ordinate? And can you first explain what Ordinate does? It's a very interesting company, unusual for the sector it's in, and the kind of opportunity that we saw years ago. I think most of us are shareholders. So let's start by explaining what Ordinate does and then why the share price has fallen so much over the past 12 months or so.
Yeah, so Ordinate is the business responsible for the Dante protocol. And for people who aren't in the industry, Dante is a protocol. First of all, is a hardware software mix that allows communication between devices. So the Dante protocol is installed in audiovisual gear, and it allows AV gear to talk to one another without the use of cables. I've always thought about this as a Bluetooth for the AV industry. The same way Bluetooth allows gadgets to talk to one another and connect to one another, Dante does the same for specialized AV gear. And it's a bit like Bluetooth. It's a winners take all market. I mean, when you think about high-end speakers or high-end amplifiers and other audiovisual gear, the manufacturer is only going to install one protocol, most likely, because it costs money to install multiple protocols and it takes up physical space in the device. So the protocol with the most connections is likely going to be the one that continues to win market share. And that's why we think it's a winners-take-all market. Dante is by far the clear leader in the audio space. They're now competing in a more competitive and difficult video space. And on top of that, they've now developed a software layer. So once you have many, many devices with Dante chips in them, you can then set up complex networks, and you need a software to install and manipulate those networks. And that's what Dante is also selling as well. So you've got several kind of revenue streams here. The first is from the sale and royalties of individual chips that go into devices. So when someone like Yamaha will build a speaker, they will buy the chips from Dante, and they pay revenue to Dante to install into that device. They might do a software installation, in which case they'll pay a fee to Dante to have the license, the software license, so it will work with other Dante connected devices. And now
so it's the hardware manufacturer who's paying Dante for the software?
Correct. It's not the end. Well, it isn't. Ultimately, it's the end customer, but it is the OEMs. It's the manufacturer of the equipment who's paying Ordinate to license the Dante protocol. But they're also now selling software, cloud software, to manage larger, more complex installations. Now, there are several avenues for growth for Ordinate. The most obvious one is just continuing to install Dante in as many devices as possible, and that increases the revenue as items are sold and refreshed in the industry. So every year, the industry, a DJ or a concert venue or a building might install new speakers, new amplifiers. And they'll need to, and they'll come with Dante chips. So Ordinate will receive revenue that way. You can also then sign up to their cloud software and receive recurring revenues through the software division as well. That's quite small at the moment. So there's a lot of promise here for Audinate. This is potentially a monopoly business where the winner takes the entire market, and Dante's in a good position to be that monopoly. But as you say, John, they've had quite a bit of trouble over the last 12 months or so.
Yeah, so why is that? What went wrong? Because we first recommended this. We should let listeners know back in 2018 when the share price was around $250, I think.
Yep.
It got up to $27, I think, in July last year.
Yep.
And now it's back down below 10 and has been as low as $650 or something. So
right.
Did everybody just get carried away, or did something go wrong in the business? What happened?
Audinate wins the award, I think, at II for the quickest buy consensus we've ever had on the team. I remember a couple of the analysts went to a presentation from Audinate, and they came back and just said, we've got to buy this stock. And I think within a day or two, we had upgraded it, and most of the analysts owned it from about $2 something. I know my purchase price was $270, and I remember most of the guys in the room at the time were buying stock when I was buying stock. So this has been a long-term recommendation. We identified very early on that this was potentially a monopoly. And that's the way people started to view it, because you could see that it was getting into more and more devices. It was crushing the competition. And I think even now, the question of what's the dominant protocol has been answered. It is Dante. I don't think there's another competitor that can compete with it in audio anyway. Video is a different matter. But in audio, it's already won the competitive race.
Yeah.
The task now is to monetize that. And I think that's where us included and a lot of other analysts and investors got Audinate wrong. I think we kind of assumed that it was a secular growth business where it was taking market share from other competitors, and the market itself was growing fast enough to offset the inherent cyclicality in hardware sales. You know, hardware sales go through their own sales cycle. There's an upgrade cycle, much like there is for any other piece of hardware, but there's also a cyclical element. Consumers and users of hardware upgrade when they have more money, and when they don't have more money, they don't upgrade. So during the post-COVID boom, there was a huge upgrade cycle underway, and it was disguised as a secular cycle. And so we thought that this is evidence that the industry is growing faster than we thought. And in fact, what had happened was that it was just a cyclical boom. And now that boom has bust, and so sales have collapsed.
And that was evident in the latest result, was it?
Yeah, they actually highlighted that late last year, which is why the share price has fallen so much. They came out and said, look, our sales have really slowed down. OEMs aren't ordering the chips. They're running through their existing inventory. And that was important because it meant immediately lower revenues and immediately lower profits. Mm-hmm. But it was also changed the way that we view this business. And I think the way most of the market now views this business. We thought it was a runaway growth story, and now we recognize there's a high degree of cyclicality in Audinate, and that's going to permanently change the multiples we're prepared to pay for it.
Okay. So what does this mean for our recommendations and how we value it? If it's not, presumably we're not valuing this on the higher multiples we did when we first went in, because it doesn't look as though growth is what we really expected. Is that true?
Well, the long-term opportunity remains intact. You know, I think the original thesis still stands. I mean, Dante is still the dominant protocol. It is still far ahead of its competition in audio, and in video, it's actually it's probably exceeding certainly my growth expectations.
Really? The
number of devices being connected on video, the number of OEM brands that have signed up for the video product is going really, really well. We don't have too many complaints there. But the financial returns aren't coming because of the cyclicality. So Audinate revealed that of its top 10 OEM brands, 4 of them, and this is a pretty highly concentrated industry, mind you, where the top 10 brands account for an overwhelming majority of industry sales. 4 of the top 10 brands have not ordered a single new chip from Audinate.
Wow.
So that's been a huge problem for sales, and sales were down some 30%, and that impacted net profit to the tune of sort of 90%. So, you know, this was a growth business on a really punchy multiple, and profit fell 90%. So that's going to have an impact on what you're prepared to pay for the business. And that explains why the share price has collapsed so much. But I do think for the longer term investor, the opportunity of a monopoly still remains. It's just that it's going to take a bit longer to get there. And there are more risks around it. So, our advice is to watch your portfolio weightings a lot more closely. And there are some soft things going on, John, in Audinate. The way the management incentivizes themselves. I think some of the disclosures have been a bit off. And there's been some strange share price share sales. A key management personnel just left abruptly last year and sold all his holdings, which was really weird. Yeah. And then they went off and changed the way they incentivize themselves. They used to incentivize themselves on revenue, and now they've told the market that, actually, it's gross profit that's most important for us. And that was handy because revenue collapsed a lot more than gross profit did. So
gross profit's gone through the roof.
Well, it hasn't gone through the roof. It has fallen, but nowhere near as badly as revenue has fallen.
Okay.
And that's because the software part of the business, which attracts the highest gross profit, has continued to grow while hardware sales have collapsed. Yeah. So the revenue has gone down a lot more. The margins have gone up. There is some justification to what the company is saying, but when you take all these small bits of quantitative pieces of information together, they just give you this yucky feeling about the company that, and I think it reduces trust in the business, and it's made me pause a little bit about my bullishness. So look, I don't own the stock anymore. I sold it earlier, actually, to buy something else. What did I buy?
What about you, Graham?
I think I bought Eagers with it. But
did you? Okay, yeah, something a little bit more stable and predictable.
Well, I thought the opportunity at Eagers was just such a standout last year.
Well, what about you, Graham? Do you own Audinate?
No, I've never actually owned Audinate, though. I kind of kicked myself for not buying it at the time because it was an interesting little opportunity, I thought. I remember hearing about it, many years ago when it was put to the Dragon's Den. And
well, the sound of all the analysts high-fiving each other would have been deafening in the office, Graham. Because we all 10-bagged on that stock.
Yeah.
And we're all very enthusiastic about it.
I was quietly sitting in the corner just watching the others make the money.
You just watched as we all came in our Lamborghinis.
Yeah.
I had a fair show. Just want to make that clear. Okay, look, let's end the Audinate discussion there. We're going to take a quick break, and then we're going to come back and talk about another of Australia's great businesses, which is Cochlear.
Are you looking for your next investment opportunity but not sure whether in Australia or overseas? With the Intelligent Investor Select Value Share Fund, you can have the best of both worlds. The actively managed ETF invests in the best growth opportunities at home and abroad, giving you exposure to a diversified selection of companies with superior financial metrics and competitive advantages. For a limited time, you can invest in the fund with zero brokerage fees directly with Intelligent Investor. Learn more at offer.intelligentinvestor.com.au/IISV.
Okay, Graham, back to you. Cochlear's come out with a recent result. Didn't seem to be too bad. This is an amazing success story, probably like CSL really, except that there was one single person behind it at its genesis rather than a government. Tell us how Cochlear's doing, Graham.
Well, it had a pretty mixed result, so I wouldn't necessarily say that it was a brilliant result, but the main news out of it was that its services revenue, so the business kind of split 2/3 of its income is from implanting the cochlear implant itself, and the other third is from selling things like the external processor upgrades, repairs, battery changes, all of that kind of stuff. And the interesting part of this result was that second half, the services revenue actually declined by 12%, which is pretty unusual for Cochlear because it should be the kind of company, whereas you've got this growing installed base of users, you should expect over time more and more of the sales.
It should be more like Apple, really.
Yeah, pretty much. Only the product is drilled into someone's head, so they really can't switch.
I hate to break this to you, but that's exactly what Apple does to you as well.
Yeah, that's right. True. Maybe that's
glued
true.
to your
I'm
hand
swapping
rather
mine.
than drilled into your head.
Yeah, exactly. But anyway, with the service decline, it was a bit surprising at first, but there was kind of a good reason for it in the end, which was that last year they had introduced the new Nucleus 8 sound processor, and that just did so much better than expected. Sales of that was up 30% almost, that it seems to have brought the sales from this year into that into that part of the year. So people were just upgrading sooner because they liked the product more. So the stock, I think, is being punished a little bit too harshly with that kind of background. It was disappointing to see the services revenue decline, but when you consider that it's probably mostly due to the fact that people just liked the product so much that they upgraded early, maybe over the full kind of 4 or 5 year upgrade cycle, you'll still see higher sales. So I'm probably a bit more optimistic than the average investor.
Can I just clarify something, Graham? It sounds like you're suggesting that people who already have a cochlear device like drilled into their heads upgrade and change when there's a better device. Is that correct?
Well, they don't upgrade the implant. That's there for software. 70 years or so if they live that long.
Right.
But you do have an external sound processor which
I see.
Okay. It. So yeah, it's that external part that the company's constantly modifying and changing.
I see.
The software within it to just produce better sound quality, basically.
I see.
Or have little upgrades like you can connect it to your phone or TV or whatever.
And do we know? So Apple, it's just going back to Apple. They publish numbers on how many users are using the latest phone. Do we have any idea how many cochlear users are on the latest implant? Is there an upgrade cycle that's reliable?
I'm not sure that I don't believe the company releases the exact numbers. They release the number of implants each year.
Right.
But then you've got to kind of play around with the figures and make some assumptions based on how many people basically haven't died in the meantime or are choosing to upgrade, because it also depends on the insurance payment. So some people will have a longer insurer upgrade cycle, basically, where the insurer will let them upgrade, say, once every 4 years, once every 5 years, 6 years.
I see.
So you generally would see at least kind of 30% or so of people upgrade in that first year, and then it kind of peters out over the next few years and then actually declines quite sharply before the next upgrade is released, because people are kind of just waiting for the new thing. So, but it does seem like the current cycle has kind of shifted to the front end a bit more. People were just very excited about this Nucleus 8.
Okay. So the profitability might be under pressure in the short term, but you think the long-term growth outlook, like CSL, looks pretty good?
Yeah, I do think that the most important number to watch is that implant unit growth. How many people are actually getting the implants? Because once it's in there, then we know that over the long term, the company's going to do fine. It's going to be able to sell them these upgrades at some point. And implant growth was around 10% this year. So that's a pretty healthy number. And although the stock's trading on a pretty high multiple, so it's not a clear bargain at today's territory.
So it's about 41 at the moment, which makes CSL look...
Yeah, it makes it look really
attractive,
cheap.
Right?
Yeah.
Yeah, I mean, it's less diversified, so there's some risk with that as well. But Cochlear, I think this is probably a classic case of where the market is being a bit harsh because the short term doesn't look as good as the long term. They're increasing their IT spending at the moment. That kind of blew out in this upcoming result. And when you combine that with the decline in services revenue, I think it spooked people a little bit. But this is one of Australia's best businesses, so it deserves a high multiple. It's growing at a very healthy rate on the underlying kind of implant level.
What is that growth rate? Is it a double-digit growth rate, or is it less than that?
Implant unit growth is around the 10% mark.
Okay.
And then they've typically been doing a bit better than that with the services revenue, which is roughly a third of the business. But yeah, I mean, this result kind of went backwards. So we won't project that into infinity.
Still a punchy multiple, Graham, sort of 40 times earnings for a business growing maybe low teens.
Yeah, it is tough because when you look at that multiple, it's higher than most of the healthcare stocks in the index. And so you do really have to justify it. But when I think, look, if I owned this whole company, would I want to hand it to my children or would I want to sell it at today's multiple? And I think, this thing could be going for the next...
When did you get children, Graham?
My theoretical children.
Oh, right. I think you should make that clear.
Yeah. Anyway, should I hand this to the next generation, or should I? Would I rather just keep it forever, or would I rather sell it at today's multiple? And I don't think I'd be selling it. This thing is going to just keep on growing for the next 10, 20, 30, 40, 50 years. And selling out just because you can get a little extra profit today, I think I'd rather just hold on and see how it goes.
That's good advice for a business that we sold probably about 10 years ago now. I never managed to get it back on the buy list. And it's a chapter in the book, This is exactly the lesson that we should take from our history with Cochlear, which is not a good one. That when you own a good business and you can see a future mapped out in front of you that seem fairly confident about, and it's going to grow at a reasonable clip, the best thing to do is to hang on. And we didn't, unfortunately. But
maybe that's a sign that I learned my lessons.
I think you might have learned your lesson, Graham. Yeah, I think we all did from this one. Anyway, okay, let's move on to Escape Hatch. The world is a confusing and confounding place right now. We all need places where we can go to just tune out. So let's have a recommendation from Gaurav. What do you think listeners should be listening to, watching, reading to just get away from things?
All right. Listen closely, everyone. I'm about to reveal the single best TV series around at the moment.
Oh, no. Why does my heart drop when you say that?
All right. The best thing on the screen right now is Invincible on Prime. It's a cartoon. It's an animated series. But it sort of asks the question, it starts off in season 1 asking the question, what would happen if Superman was the bad guy? How would the world react? How would you fight him? What are the implications of that? And it goes on from there. It is, if you've seen The Boys also on Prime, it's similar to that. I mean, it's bloody, it's gory. It is certainly not for children. But I just love the questions it asks and how mature it is dealing with an infantile kind of subject matter. Yeah, I think it's really interesting. Can't recommend it highly enough. It's fantastic.
Okay,
it's Invincible on Prime.
That sounds good. Graham, what about you?
Well, I'm a major history buff, and so one of my podcasts that I like to listen to is The Rest is History. I'm not sure if anyone else listens to that out there. Oh, you do?
Isn't like the third biggest podcast in the world or something?
It is.
Is it really?
And it's also, I should say this because being a bit of a football fanatic, it's owned by a company called Goalhanger, which is owned by Gary Lineker, former England striker, played for Barcelona, played for Grand Passat in Japan. Very successful businessman as well as football commentator and pundit now.
Huh.
So he's got The Rest is Football. That's how it started, and he's got Rest is History. And my recommendation would be The Rest is Politics. It's actually really, really good as well.
I love
US
that one
version?
too.
I like the US version.
Yeah, it's got Scaramucci or the bloke from the Bohemian Rhapsody song on it. So Graham, tell us about The Rest is History.
Anyway, one of their latest episodes, they've got a series out at the moment, which is on the Congo Free State, and Leopold II, who is of Belgium and who kind of took it over. But anyway, there was this one line in it which I thought was incredible, and it was that they put this acquisition of the Congo Free State by the King of Belgium as being the greatest trade deal in history. And I'll just read out to you what the trade was because I just thought it was amazing. So anyway, Leopold gives the chiefs of the Congo, this is a country the size of Queensland and New South Wales combined. He gives the chiefs a piece of cloth per month was their part of the deal. And in return, they gave him all their territories, all tax and toll rights, all game, fishing, mining, and forest rights for all time, in addition to the promise of assisted labour for any works or improvements that the king wanted to do in the country, which kind of opened it up for a legal avenue for him to pursue slavery there. And so, it was just an incredible deal.
Why did he do that? There must have been some threats hanging over his head to sign that off, surely.
Well, it was a series of treaties. It wasn't any one person. But the main reason was probably that they were completely illiterate. They didn't have a writing system. They didn't have the paper. And so when someone was offering them a nice piece of cloth, they didn't they probably just didn't understand what they were exchanging. It wasn't a fair deal. It wouldn't pass today's contract standards, but it was just an incredible deal. It opened up just like it was a tragedy. The whole thing, 10 million people are said to have died there by some estimates because of the terrible conditions that were inflicted upon the local population. But
it sounds like a good proxy for colonialism in general, really, just a very stark example of exploitation.
Yeah, I think it probably goes down as when people think of the most evil people in history, Hitler's usually at the top of the list, but Leopold II would be up there as number 2. He was brutal and all just to pursue profits there. He was a very cunning leader. So, yeah, quite interesting.
Okay, the rest is history. I can recommend that too. My recommendation is another TV show. I think a lot of people these days have a lack of trust in the bureaucracies that surround us. They're either incompetent or in some cases venal and aggressive in the way that they pursue individual citizens. We saw that with robo-debt in Australia. There was a similar case in the UK that went on for much longer and in some ways was far worse, about the sub-postmaster scandal. And postmasters, 500 of them in total, I think, maybe more now, were accused of stealing money from their post offices that they ran. And what actually happened was that Fujitsu, who had installed this pretty useless system to manage postmasters, the postmasters used to manage their post office, was pretty shonky and it was making mistakes. And the post office recognized this and they employed a team of people to remotely go into postmasters' accounts and change the numbers in it so everything's supposedly balanced. But of course, these were, when they made changes, they accrued losses, which were then deemed to be payable by the sub-postmasters, and they were prosecuted for theft to restore those losses. I don't know how much was paid in total. The post office is still very reluctant to release any figures. But they basically put people in jail and ruined their lives. And as with robo-debt,
suicided over this.
Suicided as well, same as robo-debt. The difference is that some people were actually held to account for it, unlike with robo-debt. But there's a series on it. It's called I forget his name now, versus the post office. Mr. Bates versus the post office. It's on 7+, so you only need to watch ads. You don't need to pay for it. It sounds like it's a really depressing story, and it is. But one of the great things about it is the humanity in it and the way that people came together to fight their case together, and probably saved quite a few lives as a result of the connections and the bonds that they formed. And eventually they won. And they were vindicated, not necessarily in the court, but certainly in the court of public opinion. In that sense, it's a very, very restorative kind of series to see people fight back through getting together and just hanging in there and taking on these huge venal bureaucracies. And the other thing about it is you get lots of long shots in the Welsh valleys in South Wales, which are quite beautiful, around Snowdonia, lovely part of the world. Even that is a visual feast too. So Mr. Bates versus the Post Office on Channel 7+ app. That's all, folks. We're off back to reporting season. Thank you for listening, and we'll be back with you in 2 weeks.